This is Robert Harper with Virginia Farm Bureau's Grain Division. Glad to bring you the Merchandiser Minute for Friday, May the 8th, 2020. And congratulations for another good week that y'all have had on the farm, being productive around weather events, and thankful for the conversations that we've had together this week. A lot of activity as we've become accustomed to in the futures markets and in the basis markets to go over today, and I want to hit a few highlights with you. One of the first things that I would mention about this week that stood out, we came into the week with some negative tones between the United States and China in reference to COVID-19 and how that might impact the Phase 1 trade deal. And we did get an announcement today from the Trump administration that the Phase 1 trade deal is still intact, that both countries are committed to the obligations that they've agreed to. That's very positive. It was also made aware to everyone this week that China and the U.S. at the highest levels would be having a conference call sometime next week, to discuss the trade deal and the obligations that they have to each other. That was very good news. We also saw again this week the United States remain the best price for corn in the world. That's a function of a lot of different things, obviously, but it has definitely stirred up some demand for U.S. corn. And in the market environment we're in, where we have lost demand domestically for corn due to COVID-19, it's nice to see export business come back, and we definitely did see a nice export sales report this week for corn, as well as multiple flash sales announcements. Also tied to some positivity this week was a big rebound in the energy sector. Just taking a snapshot of some of the futures prices during today's trade. Crude oil was trading at $24 a barrel. Gasoline futures at 93 cents a gallon, and ethanol futures at $1.08 a gallon. So those numbers equaled out to some fractionally better margins for the ethanol producers that are still operating. We got a weekly EIA report this week that showed for the first time in 7 weeks that ethanol production was up about 11%. And it also showed that the ethanol stocks were down about 2.8%. That's good news. But we do have to keep it all in perspective. When you look closely at that report, the weekly EIA ethanol report from the government, it showed that about 59 million bushels of corn were ground last week for ethanol consumption. And a year ago that week, 103 million bushels were ground. So that's pretty much in line with the consensus that maybe 50% of U.S. ethanol production is offline. We also saw news this week from the U.S. Trade Representative that we are currently in talks with the United Kingdom, working on a bilateral trade deal. And really a theme for the week has been the cold weather snap that was forecasted for this weekend, not only for here in Virginia. I know y'all are dealing with that in the upcoming potential weather event Saturday morning and Sunday morning, but they're also dealing with frost and freeze warnings across a lot of the eastern corn belt, and that helped fuel futures prices going higher this week in some instances. One thing of note, 2019 we know was a record year for U.S. pork exports to China. We're on pace for a really good year this year for pork exports, but as COVID-19 has affected our slaughter capacity so drastically in the U.S. for poultry, pork, and beef, there's been a lot of news stories this week about the importance of watching that U.S. pork export program to the U.S. and seeing maybe how that would potentially hurt domestic supplies of pork if we're running at lower slaughter capacity and we're still exporting at such a high level to China. I did find a note this week that was interesting to give you an idea. As much pork as we did export last year to China, a record number for us, it was still right at only 1% of what was consumed in China. Let's take a look at the futures. July corn closed for the week at $3.19. That was up 2 cents for the week. July soybeans closed at $8.50. That's up 2 cents for the week. And July wheat closed at $5.22. The Chicago contract, that's up 12 cents for the week. Nice to see green on the board for all three of those commodities. And We did come into the week with a commitment of traders report for last Friday, May the 1st, showing the managed money speculator was still a large corn short position and a very small long bean and long wheat position. And be on the lookout for that report later this afternoon that would be effective of this past Tuesday. We look over at the cattle side. June live cattle futures closed up $6 per hundred for the week at 94.65. May feeder cattle futures closed up $9 per hundred for the week at 127.90. And we did see different reports this week of cash cattle, live cattle, fat cattle trading for $10 a head, or $10 a hundred higher than they had last week. That was positive for a lot of producers. A lot of chatter about that on Twitter, positive chatter. Switching gears to the USDA, we did see a decent export report yesterday on Thursday. We're very thankful for those numbers, and maybe even more important, we saw a lot of flash sales announcements this week, especially from China, purchasing sorghum, purchasing corn, and purchasing soybeans. Remember, coming into the week, the crop progress report on Monday showed U.S. corn planting at 51% complete. The 5-year average is 39%. It showed U.S. soybean plantings at 23% complete. The 5-year average was 11%, so we're way ahead for corn and beans across the Corn Belt, especially in the western Corn Belt. When we look out to next week, weather is going to play a big role. However, this frost freeze event will play out this weekend. We'll see, as well as the expanding dryness that Brazil is seeing. We'll keep our eyes on that. We're going to be watching for any information out of this conference call between the U.S. and China. We're going to be looking for a lot of news on how state governments are opening their states back up. And, well, we cannot forget about May the 12th on Tuesday at noon. We will get the May supply and demand report, crop production report from USDA. So give us a call if you want to talk about what's expected in that report and if we can help you with any of your new crop or old crop marketing. This is Robert at Virginia Farm Bureau's Grain Division.